Welcome to TradeTheNBA.com. This is John. This report is for the 20th of October, and both world events, readings, all of it combined to start to continue a move back towards that previous algo level. And not a surprise, we were expecting the Nasdaq to be the leader on that move if it was going to take place, and it turned out to be the case. But you can see the magenta staying not only below yellow MBI, and it started the day actually quite improved, but started to decay rapidly. And once it got below the 25, that exacerbated the move, and it just continued to escalate further down. Starting off early morning, not a whole lot of change within that. We didn't see a big spike in the white MBI, so this was more just about free flow of selling rather than shorts creating it. But we saw the move that was taking place from a DOC right here, which was the separation. We had also had the MBI, that being the DOC steel here, and when we looked for that, was beginning its cross below cyan, and that's usually a pretty negative result at that particular stage, along with rising orange. And sure enough, it's given a pretty decent move, and it's the world events that really exacerbate things. But the Fed's comments I thought were kind of interesting because it did signal that they were willing to hold off. And of course, their justification was that yields are starting to rise. But even when we look at this, the NASDAQ, from its relative move, not a whole lot of difference relative to reaching that positive extreme refill back down here at the 14,300 range. So it's closer, but still quite a ways to go if that were to take place. And with the steel reset now coming back and dipping further, looking for any potential turnaround would create a divergent move with relatively matching lows on higher DOC red, higher shakeout readings, not to mention rising gold at this particular stage. Could be enough to really provide not just the support but the turnaround move, uh, potentially build up. What the Fed was talking about is this yield being as high as it is relative to what they're doing could be enough to tighten things, as they say, from a liquidity standpoint, meaning they don't have to do as much. But um, the reality is they're not going to have a choice as far as how much liquidity they have to provide on the back end of things, even if on the front face of the view interest rates being high in that. But still, it's a real drain for the market because when you can get a significant yield, you're going to take it. The real trouble comes right here because as oil spikes, the yield becomes really irrelevant if inflation is outstripping everything. And so you're not going to be able to catch up. And of course, the market's going to have to try and catch up to that discount of the currency value from an interest rate standpoint. And so this is the nightmare. And again, once we saw missiles flying in the Gulf, and that the reaction was pretty immediate. It's only going to take one incident, and things are going to turn south very fast, and it's just going to paralyze things in a dramatic way. Euro held up dramatically well, so you know that that's a pretty strong support there from a larger institutional situation. That's easy way to avoid saying central bank movement. No shock there. We've been waiting for the gold turnaround for a little while here. It was just a matter of uh, them clearing out all the shorthands and weakness and using what they could from the paper side of things. But um, gold, crypto, it's all going to be a move to hedge against um, you know currency issue from devaluation as well as the instability. Um, the question will be whether or not the cryptos will fare as better if we see breakdown in electronics and some of these other things. It depends on how wide the escalation gets. We still haven't seen any of the major activity from Israel or anything yet, so um, you know they could be holding that off simply because they can see this growing escalation and how quickly it can get out of hand. ETH way behind from what Bitcoin's doing, still below its 23% because of that strong white MBI lead, and so it really hasn't met the same expectations. So from gold, Bitcoin turned out to be the main players in it. From our standpoint, you can see those white MBI spikes, and we talked about every time it does, we're looking for a return back to the 0%. So we got back to the 50, white spike, boom, back to the 0, spiked again. This time it was right around the 38%. MBI white spike, moved to the 0, and it just continued to break down with the MBI white lead. And that's interesting because it did fill this positive extreme going all the way back down from here. And so that was, the beginning of October. So the S&P satisfying a lot of those. The Nasdaq being quite resilient and holding up has really kept things afloat. If you see the breakdown in the Nasdaq, then I think that becomes even more problematic for the overall market. From an intraday standpoint, you can see we had the brief selling as the market began to open. There was a lift up, and then we had this back and forth until there was just the fear element of things and the shock of it really started to wear on it, and then we just moved back down and filled in that positive extreme from the 5-minute chart here, and you can see we've dipped down below and we've just returned right back up to median. So just clearing stops, normal thing, but still all pretty consistent. Barring the world scene situation, the market's got some pent up upside to it. So it's just a question of how long this is protracted and whether it continues to grow. And I think that that uncertainty is just going to continue to be an overhead damper on the market overall. At some point, you're still going to have to decide how you're going to get the return you need, particularly if oil is starting to rise and rise significantly. So bear that in mind, because that will definitely push the market up higher. As always, though, trade well, have a good one. Look for me on Skype chat.